Investment houses often issue reports at the beginning of the year covering themes and topics that they feel will emerge throughout the remainder of the year and beyond. At Unio Wealth Management, we issued our first report at the beginning of this year due to the significant disruptions to the global economy, to politics and to geopolitics. One of the themes that we covered in this report was the persistency of high interest rates and the impact that will have for investors. I'm joined here by Ger Fitzgerald, who's going to expand on that theme somewhat. Thank you very much.
Looking at where we currently are within the interest rate cycle, the global economy has benefited from the last decade of historic low interest rates. Albeit, we're now into a new environment. Changing macro conditions have resulted in central banks across the globe raising interest rates at a speed over the course of 2022 that many market participants were caught unawares of. The effects of these interest rate rises has had a significant impact. If we were to look at the profitability of corporate institutions and also the budgeting of governments alike due to this increased cost of debt financing. However, we have to put this into perspective. If we were to look at the 1980s, prevailing interest rates were trending at the order of 19 and 20% at a time when inflation was in the order of 14%. We're nowhere near that at present. However, we have to be aware that the rise in interest rates came at such a velocity that it has had an impact on financial institutions. If we think of some of the more localized stresses that have evolved over the course of 2023, this has had an impact on some institutions needing some assistance or even bailout. And Mike will go into these in more detail in a moment.
Thanks, Ger. So last year was all about fast rising interest rates. This year the story is about the effect of persistently high interest rates. And if I look at Federal Reserve forecasts or the dot plot charts, we won't actually see many rate increases and decreases on a net basis, but it's really about the pressure of high interest rates of say 5% on businesses, on banks and on economies. We've already had the first case of this where high rates have discovered weakness in the financial system in the case of Silicon Valley Bank. And I think what we're going to see is this discovery of a winner-loser effect where banks, economies, companies that are safe in terms of their balance sheets will be fine, whereas those that have got too much leverage, too much risk, or where there's funding imbalance will be found out by markets. We'll see volatility in those parts. So in terms of our investment committee, the kind of things we're looking at are credit spreads and volatility indicators across markets.
Thank you, Ger and Mike, for your valuable insights there. We hope that provided viewers with a thorough understanding of the topic we discussed. Here at Unio Wealth Management, we're very happy to provide you with insights into themes and topics that may help you make informed decisions when managing your investment portfolio. For further information, feel free to speak to your financial advisor or visit our website www.unio.ie.